Hey guys, welcome back. In today's video, we are talking about AMC valued at $37, shorts hiding and buying AMC, SEC hiding data, and many more in this video. Now, first we're taking a look at this. The intrinsic value of one AMC stock under the base case scenario is 37.53 USD. Compared to the current market price of $4.53, AMC Entertainment is undervalued by 88%. Now, as of right now, AMC is at $4, so that undervaluation is actually even higher. But something that we need to talk about is understanding that what we are seeing for AMC is the improvement of fundamentals, which is being recognized by algorithms, by these data sites, and that's why we're seeing the intrinsic value actually going up. Previously, when we covered it, AMC intrinsic value was around 24, 27. And now as we progress into the future, as we see the box office go even better, as we see AMC make very nice investment, make very good investments, as we see them paying off their debt, less interest payments, everything that allows AMC to grow, everything that shows AMC is improving their fundamentals, we're seeing the intrinsic value to go up. And for right now, it's at 37.53. Even when you take a look at in terms of the comparisons of other competitors in the industry, wherever you look at Cinemark, wherever you look at IMAX or any others, obviously there are exceptions in terms of their business structures. But when we take an overall look at other competitors within the industry, AMC is extremely undervalued, even though it should be the biggest in the industry. And so knowing that we are undervalued by 88% obviously shows that, again, the suppression and manipulation that's happening. And remember, this isn't regarding the squeeze. This is only based off of fundamentals, but we also have to regard and put into consideration is that if AMC right now were to go to 37.53, firstly, many short sellers would, of course, be in a bad position. That will cause short sellers to cover. Secondly, is obviously the FOMO, because people will want to buy AMC when it's at 37.53. And so you can see how just by AMC showing a real value, it can easily affect these short sellers, and that's why they suppress AMC 24/7. You can also see something else. I thought Virtue hated AMC and said it's a shit company going to zero. And now what we're seeing is obviously Virtue buying in. Now, this is something that we've covered in the past, but you can also see just again how short sellers are buying into AMC. And now we talked about this, how this was obviously a play because they are afraid of what's going on. It's very likely they're buying these shares to rehypothecate, to obviously lend out again, and just to short it 10 times over. And again, depending on how they use it, the 196,000 could be used as 19 million, could be used as 1.9 million, or just could be used at 196,000. We don't know, but there's obviously a reason for them to buy. Now, they tend to have different reasons to buy in terms of multiple reasons. Of course, like we talked about, one, to rehypothecate, another to hedge because they are worried about what's to come. Because something that we have to understand is that Virtue has hidden a lot of trade. So if you guys take a look at this, this is Virtue Financial. You can see Virtue Financial Ireland Limited, Virtue Europe Trading Limited. And what we're seeing is how it's obviously hidden off-book. You guys can see off-book trading, off-book trading. Now, we are not in terms of surprised to when we know these firms that they're doing offshore, that they're doing off-book trading. We know that many times any shares that are considered offshore, so not within the US, doesn't have to be reported. And that's why we talked about all the time, the short interest, the FTD, it may not be extremely true because there are data that doesn't need to be reported. So if we look at the short interest to be 30%, it's very likely that's even higher than that because there may be another 10, 20 or another 60% that's obviously not being reported. And this is just a clear example of obviously how they do it. They obviously do with other companies in other regions and therefore they don't have to report it. Now, this is precisely why it's even important to understand is that because they're doing this, because they're not showing their short trades and suddenly they're buying into AMC, it gives a lot more reason to know that they are extremely afraid. Because if they were succeeding in what they're doing, they wouldn't be buying AMC. They wouldn't be, doing all of this. And another thing that I kind of want to talk about is in terms of the sentiment. Now, we're still seeing bad sentiment on AMC. We are still talking and seeing how some firms are obviously saying that box office is recovering, but AMC is not going to, of course, benefit of that, and that you should be buying Cinemark, you should be buying IMAX. But one particular is Investor Palace. You can see Investor Place. One of the Investor Place articles bashing AMC. Their own website shows the last AMC stock article on August 15. Seems suspicious as they bashed our company 24/7 and now crickets the past 4 months. So one of my assumptions for this is obviously they know what's about to happen. We talked about the connection between Investor Place and of course firms that are also that are trading and that are affiliated with Investor Place. But one thing to note is that Investor Place went from a company that talked 24/7 about AMC, of course negative, to someone that doesn't talk about AMC at all right now. Now, the only reason I could think of this is because they know something's about to happen with AMC. And a very obvious example, a very simple example to understand is that if a news article company were to continuously talk about a stock and talk about how you should sell, talk about how you shouldn't buy, and then the next day this stock went from $4 all the way up to $400, it's obviously going to be an extremely bad look for the news article place. Now, in this case, we know that AMC at any point has the potential to, of course, go from $4 where it is right now to, of course, short squeeze into not just 400, but the thousands of dollars territory. And of course, if Investor Place were to continue bash about that, and then for AMC to have that happen, it will obviously be an extremely bad look because it would show that Investor Place, a news article website where you should get the most up-to-date, the truest form of data, is wrong. And so that's what we can see, that's what we can assume, is that they understand something's about to happen for AMC. They're worried about in terms of the negative lash that's obviously going to happen to them, and that's why they're being silent about AMC. Now, I'm curious to hear what you guys think about this. This is just my reasoning, but again, like we talked about, it's weird that they're not talking about this. Furthermore, the SEC is hiding the missing GameStop failures to deliver data. I smell a repeat of January 2021 coming, but magnified MOAS. So what we're seeing is how the SEC just denied the request for GameStop's missing FTD data. Classic move when you're trying to keep the market transparent while hiding the scoreboard. Now, again, we are not surprised that this is happening, and this is why we want the new SEC chair to obviously come on board. This is why we want a new administration, because we're hoping for just a better regulation all over the place. Now, what's important to note from this is obviously knowing the fact that they're trying to hide data is definitely showing that something is happening. Why would they try and, just do something if they don't think that it's going to affect anything? And in this case, we know that whether it's GameStop, whether it's AMC, these are all stocks that could easily influence large hedge funds that are out there. So it's not a surprise that they're doing this. And this is why it's important to note when we are seeing this happening is understanding the indications of what's to come. Is understanding that it's showing that we are, everything that we talked about, it's all coming to fruition. The MOAS, the squeeze, everything is coming right now. And that's why they're trying to prevent this from happening. And another thing to understand, and this is what we talked about with the power of retail investors, and it's just understanding how many users. And you can see 900,000 is a decent number for GME. I count myself as one, but 4.1 million is a massive number for AMC. And so this is what we have to understand in terms of the start of 2021, we saw around 10,000 individual accounts trading. That figure has shot up to a whopping 900,000, and this is per day. So we had 900,000 people. But for AMC, it was a group of 4.1 million investors. And again, this isn't a competition between who's better between AMC or GME, but this is understanding the power that retail investors have, wherever it's for GME or wherever it's for AMC. 900,000 active traders on GME. This is something that's obviously going to damage the algorithms. This is something that's going to damage the capital of the short sellers. But the fact that there is 4.1 million investors of AMC, this obviously shows just how big the investor base is. This shows also just how much synthetics they have created over these years to fill the appetite of 4.1 million investors. Because we have continuously bought shares. We have continuously not only bought shares, but not sold any shares. Yet you can still see that there are shares on the market. And this obviously means that they have created synthetics. This means that they have, you know, rehypothecated the shares. But like we talked about, the more shares that they make of these synthetics, the more synthetics that they put into this market, the more they have to buy back in the future, and the more they buy back, the higher the price will be. And that's what they are afraid of, and that's what we have right now. It's important to understand that. But yeah guys, thanks for watching this video. I'll catch you guys next time.